Good morning, everybody, and this is your S&P 500 day trade setups for today. So pretty much nothing really going on here. I want to extend that trend line there. You can see what's happened yesterday, pretty much big up, big down, big up, big down. Consolidation at the moment, and I think it's safe to say take the high and low of yesterday, like that. Those are your two levels to pay attention to. We pretty much just mucked around in a range all day. We've got a big juicy gap to the downside. Oscillators on the 8 hour are looking a little bit bearish for me. So I'd need to wait for a level to give way for that to be validated. But at the moment, it is a warning that you do not want to be looking for longs at the moment. And it's also against the trend. So the trend is down. If we start looking at the 3 hour, you'll see pretty much what's forming. And as I said yesterday, you've got a possibility here of a shoulder, head, and shoulder. Now, we need to get above 44.7 or 44.8 for that to be validated for a move to the upside. That is still counter trend. Trend is down on the 8 hour as well as the 3 hour. And this is a very clear range. So those two levels are the ones to pay attention to. And we'll look at this on the hour. So if we look at it, we've got a moving average crossover. We've got diversions here. Okay, so we've got a bullish signal. Then we've got a bearish warning. So you can see price making highs, and then there's diversion. Then the other thing that you do have is another bullish scenario brewing, which could be this flat top triangle, which would also validate the head and shoulders. Or inverse head and shoulders, should I say. So there's no real trade here until we start getting above this level. And this area here at 48 is also above the 155 EMA. So you can see how we've been respecting that and rejecting it basically the whole of Monday and Friday. So that is the situation, guys. This is trending sideways. We're waiting for some catalyst, that's for sure. And the question is, what is that catalyst? The 15-minute doesn't offer any additional information for us, apart from the fact that we potentially have reversed, and we're just above the 155, which is my sort of my trend line, so to speak. So it does look like it's bullish, but bigger picture here, we are sideways. And you do not want to be jumping in here. Very few people get this right, get the bottoms and tops right in a range. If you get it right, you're going to go for it. But I don't. I often mess it up. So, and the emotions play a big role in picking the tops and bottoms and making your decisions. So, and don't anticipate the break either. Wait for the break and wait for the structure to form. So that is kind of a little bit of a squeeze that's forming. Break above this area, 48, that's my signal for longs. And the beauty about that is going to be, you will be looking for a 1,860 point move, or a 4.5% move to the upside if that happens. So well worth paying attention to. If you start dropping below here, then it's basically a rejection of this area, and you'd be looking firstly for gap close, which would be 570 points. The problem is your stop is around 700 points. So you're going to have to wait for the structure, and hopefully the structure gives you a better entry. But yeah, this is sit on hands, guys. There's no reason to be jumping into this. We do have some data coming out this afternoon, so well worth paying attention to that. And the other thing is that tech stocks are still getting a bit hammered right now, which does play a major role in the S&P 500. But yeah, as far as I'm concerned, the more people that are screaming that we are falling to the floor and no recovery and everything else, and if you start looking at some of the company results, that's not what's written in the company results. So I'm very cautiously bullish at the moment, just waiting for the signals. And as soon as the signals are out, we will be in, and we'll start loading and loading continually, just to start getting to capitalize on this this pullback, because that's what it is in my eye anyway. It's been a very healthy pullback, and if you just look at it on the daily, we have pulled back 16% at the moment, but we have pulled back just short of 20%, so 19.78% roughly, and that is a healthy pullback. Last thing to look at here on the daily, I just want to delete that. So if you look at the oscillators, we are extremely oversold, and we've also got a bit of a crossover. I need to get above the 20 here on the stochastics for that to be validated. But also pin bar reversals or V reversals are very rare, especially on the daily. So you would expect some kind of base to be formed, and that's why 39.86 is a fairly decent area. But then there is another one, there's a gap, and then there's also this daily level here, which is 39.68. And if we just look at that on the hour, you'll see there it is there. Okay, so yeah, be cautious. You're only looking for longs above here, and your shorts are going to be scalps if you do see any opportunities for shorts. So really be scalps. Look at this level, then look at the sort of each one of these tails, these inside tails, and the gap would be your target areas. But that could very well be a pullback to create a higher low, building a better structure for, or even a bigger right shoulder for a move to the upside. Okay, anyway, that's kind of my view at the moment. Not looking for longs until we get above 40.48. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.